How would you like to make your first million? And today we have Paul Graham, which is the founder of Investor Guide to Joy. So Paul is a serial entrepreneur in Austin, Texas, who believes you discover your potential one moment at a time. He's a former commercial real estate broker who co-founded a software company that later sold and entered in the fintech space. He used his salary and business endeavor to purchase properties and um, and all the story started after his experience with being lost in the wealth building trap. He started the podcast, host of the Investor Guide to Joy, and to share perspectives and tips for the investors on their journey. So, Paul, tell us what are the 5 steps to make your first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Well, it's going to depend a little bit for people, but I really wanted to focus on like what could be applicable to anyone, right? Because oftentimes we think we can, or sometimes we think we can't make our first million, but that's really how it starts, right? So the first step is acceptance. It's understanding like who you are and what actions you are, but also what actions you're not taking, right? If you're not having sales calls, well, then you don't have sales, right? Pretty simple, but first having understanding of that, then we need to understand like where we're going, right? Understanding, where we want to be and what does that even look like, maybe even like feel like. I have a 3-year vision template on my website if people want to like use that, because that's really helped me of like, where am I going, right? When I have that million or how I have that million is also as important as, having it too. The third piece I had was just on who. So who can change, my kind of situation or what have you for me, who could change it with me, or who has changed it before. This matters because if we don't know if it's possible, then we may not even try it, right? But if someone's already done it, then let's do it again, right? Or maybe tweak it or something like that, right? They can at least guide you along the way. Again, this idea of like the guide to joy. Step 4, my favorite, is really on action. So it's what's the one thing by doing it, everything else is easier or better, right? How could I maybe systematize, operationalize, things like that? And the 5th step is really in addition to the 4th step, and it's really proof, right? The proof is in the pudding. The difference between someone who's a 6, 7, or 8-figure earner is going to be the steps that they take or the decisions that they make, the rate of which they make those decisions, and the fact that they will consistently make those decisions over time, right? So as we go through these different pieces and we're like, hey, how do I make my first million? We're going through these things of person, vision, who, even for yourself, who do I need to become, right? And then who do I need to connect with? How I go about doing it, and then again taking that action and having that action. Because if you know anything about milk, right, or butter, right, you make butter from turning a lot of milk. It just doesn't instantly become butter. So we got to keep turning it. We can't just kind of do it, because it takes several hits to kind of get that grand slam, if you will, of that $1 million. You might hit it on your first try, right? That'd be awesome. But sometimes it takes a lot of swings. So those are my steps of like how to do it. I've done it through real estate. I know people do it through business as well. But those are the things that I've, truly seen.
And this is where my next question goes, because 1 out of 5, 1 out of 6 entrepreneurs that come to this podcast on a stop of 5 step how to make the first million, they are either in the real estate business or in the tech business, right?
Yeah.
So is that easy to become a multimillionaire in property and in tech? Is as easy as sound? Because I think people, our listeners, they are entrepreneurs, people that want to be entrepreneurs, they
Yeah.
might have the assumption that wow, because 1 out of 5, 1 out of 6 people come to Harry podcast and they're involved in real estate or in tech, uh, it's easy to become a millionaire using these two vehicles. And the answer, in my opinion, is well, they're great vehicles for you to create wealth, but there are also challenges. And we only listen a story like you, Paul, which is very inspiring. By the way, you correct the two in tech and also in property. I'm very impressed. So what message do you have for the entrepreneurs really listening? It's not about disempower them, but it's
Yeah.
about to give them a reality check that that what it's gonna take, if that makes sense.
Yeah. So, and the best part is I can completely answer your question just with my experience because I believe it's the best way to go about it because I learned from a bunch of people with it, both in the real estate and the tech sense, which is why I followed a lot of their steps. Mentors are guides, or they give maps, right? But they aren't necessarily, we should follow them step by step. So, take this for how this is for you. But simply my path was this. I went into real estate. I learned a lot about real estate. I was a commercial real estate broker. I then went into tech. I co-founded a software company. We raised, a bunch of funds. We ended up selling the company, and I continued on, with tech for the next kind of 7 years, right? Just like you shared in my summary. Now, how this matters is this: it is extremely challenging, I believe, to be an entrepreneur in tech. To constantly imagine just like a chisel and ice, and just like constantly hitting ice, right? For I don't know, 10 hours a day, right? For 2 years, right? Like that's a very
I
mentally
agree with you.
challenging.
I agree with you.
Yeah, right? Like that sounds terrible. Like I don't even want to do that, right? Now, the reason why that matters is because ultimately, as an entrepreneur, I will vary on myself, my ability, maybe the market, my product. Like I will be very optimistic and I will be extremely pessimistic, right? I'll go through this example of a fish climbing a tree. It's a great way to describe, what I'm saying. But in summation, it's to say, if I go and get the tech salary, right, to build software in some way or learn how other people are building it, something like that, right? Like get a good salary, buy some kind of property. I ended up renting out the rooms in the property to other people. And guess what happened, Harry? I didn't have to pay for me to live, right? So I ultimately had $2,000 a month that I was saving. And then what I started to do is, I started to use that to like buy more real estate. But as a software person, right, or someone building a tech company, I could what? I could use those, say, $2,000 a month to then maybe hire a developer, right? Now, granted, I wouldn't do that. That's something we'll talk about in one of the other questions. But it's the ability of like I could maybe hire someone to help me, maybe an executive assistant or maybe a marketing person or something, right? Like I have some funds, I have infinite funds to basically be my own venture capitalist, my own investor, right? Like if I go spend 6 months, $2,000 a month and nothing happens, well, guess what? I'm really not out anything, right? I just learned a lot. I spent money. I got to change the way I work, things like that. Real estate's an incredibly powerful tool. There's also depreciation. There's appreciation. There's all these benefits, if you will, with real estate that ultimately gives you kind of a level one foundation in terms of your finances. So that way, as you continue to build things like tech, which are very unknown, it could work out very well very quickly, or it could take forever. It really gives you that ability to kind
Yes.
of flirt with that. So
Yeah. Paul, and I want to ask you a question because we are with the entrepreneurs, we when it comes to business, sometimes we are not aware of the risk. And I always talk about our share this with our listeners that sometimes we have this conception that we have a business, let's say a restaurant, and then this business is making money, and then we take all this money and we reinvest in this business to grow, and then we take all this money and we reinvest in this business to grow. Whether another way of doing this that would be more, in my opinion, more efficient way to do it is that if your
yeah,
business is making money, your restaurant is making money, you take this money, you buy a piece of real estate, and you pay your mortgage, and with the money that is left, now you have infinite money for marketing that you can put in
correct.
that business, and you're growing sustainable. If for any reason COVID comes, a market change drastically, um, anything happen, you still have the assets that producing you income. So this is so what is your point of view? Because I think that some lack of because of lack of experience,
Sure.
sometimes any business can go well, Yeah, maybe you get in love with your tech business and it's doing so well, and why you didn't sell your houses to fund the tech business? Why you keep your assets and yet you took all the extra money for rent to fund that business, to employ whatever you want to employ or to use for marketing, but you managed to balance out, and this is one of the main reasons that you're very successful and you're a great role model. So, what message do you have for entrepreneurs that still don't understand what kind of risk are we getting into when we go in business? And the business, it might not outlast you. There is only few Apples and Googles and things like that that the business outlast you. They have a cycle, and sometimes people need to come in to grow it, or for anything can change and you can go out of business really easily. So when do you discover that this is the way that you want to plan your entrepreneurial path, and how you get inspired for that? By the way, my first business was very similar to you, rent to rent.
Yeah.
I was renting my room and I started to
Yeah.
live it for free. We managed to sell 5 million doing this in London. I'm based in London, by the way, but with
Yeah.
this was my first business, so I totally relate. Um, with what you do. However, sharing this, what I'm telling you, that I open restaurants, I open a lot of businesses. And so where do you got this financial sense that this is how you want to structure your path as serial entrepreneur?
Yeah, so I mean it's a great question because it's something I'm really passionate about because I've seen this happen in a lot of different ways, right? Business goes up, business goes down. For context, like I had a residential painting business, right? I sextupled, meaning 6 times that business in the span of one
Wow.
year.
Wow.
Um, and that was when I was 18. And so I don't know, I had something in me when I was 18. I don't know what I was eating, but I want to eat more of it now.
Wow,
Um,
you were very powerful. My
yeah.
goodness.
And so, but it's to say, from the real estate investor business, like kind of side, exactly to your point, right? If you have that kind of infinite money glitch, if you will, that will always help you. And you want to ensure you're investing in real estate in such a way that, you won't have any issues, right? Rent by room will always give you that. Long-term rental will most of the time give you that, right? And then short-term rental kind of depends. Midterm rentals, so think like nurses or insurance or things like that. That also
Hmm.
kind of depends, right? But rent by room will always be there because always people need like one room. And traditionally,
And
a
eventually you will learn. Maybe the
yeah,
first deal is
exactly,
not gonna be right, but it's a skill. The more you practice, the better you become. Eventually you
exactly.
will find something, right?
Yeah, for sure. And I mean, the other thing too is like buy rent by room and buy other people. Like I've started there was one company I started because of the people who were my roommates, right? And so meaning to say like it doesn't always need to be bad juju or you didn't clean the dishes or things like that. Like it's a matter of again who you are, again acceptance and like creating the environment, right? For that. So it doesn't always need to be like you're living with terrible people, right? As roommates. So as your business is kind of growing and you have unlimited marketing budget because your costs are reduced, right, and expenses are reduced, it's then to say what you're investing in. So I now play in the world of alternative investments. Alternative investments are defined as real estate, oil and gas, debt. Think like a crypto fund. We even have a carbon credit opportunity as well. Meaning to say, like you can invest in a lot of things. You can even invest into fractional ownership of sports teams, right? Now you need capital to be able to do that. So ultimately the piece is that you want to have a financial advisor or wealth manager that's like helping you through this and thinking through this. Because one thing I've found is that, we just when we do things on our own, we learn a lot, right? I'll say it that way, right? But the main thing that I've found is that between kind of like us making 200 grand and us making 2 million, we tend to not have financial advisors or wealth managers who also build businesses. They just kind of look at the numbers and they're not helping grow your company and helping you with the finances with it. I was frustrated with this, and a couple, other people are too, right? So I created a group called Octane, which is a group specifically for business owners to help them grow their business. And as their business grows, then they're getting education and information from all these different financial type people, right? They're not working directly with them. They're just getting sort of the information they need when they need it. And then they can use that for things. Reason being is I shouldn't go out and just put half of my liquid net worth into some sort of deal, right? That wouldn't be good, right? But 10% of my liquid net worth, absolutely, all day. It's the idea of like bringing family offices, people who have, or kind of groups who have over $100 million in assets. How do they kind of operate and think about finances, and kind of bringing that down? When we're trying to get to kind of that millionaire status, or just like grow our income or grow our company, we tend to take big risks. Those risks can pay off, but also they may not. And so if we spent 3 years like building this nest egg to invest, or our company starts going up and then we start buying the beautiful Porsche, I love Porsches, so that's always my example. Then that's not necessarily going to help the business. Granted, if you do have luxury cars, you tend to get into some of those communities where you can network and things like that. So, my point is just you want to keep your expenses low. One other thing I'll tell you, Harry, is that over the course of when I was in a W-2, like a formal job, I doubled my income in 4 years. And it's because I learned, how to, what skills were needed for additional positions, and constantly applied things like that. Now, that's impressive by all means, but I think the bigger, more important, impressive thing is that I was able to save up to 40% of my gross
Wow.
salary. Now,
Wow.
that matters because if I'm able to save 40% of my gross salary, and I have tax incentives and
Mm-hmm.
ability to take depreciation and reduce my active income and save on taxes, depending on where you live, taxes are like 20 to 30%, right? Whoa, I just made some other big investment, right?
Mm-hmm.
There have been years where I've just made, tens of thousands of dollars. I have to think of the big time, or, sometimes or the biggest amount of taxes I've saved. But my point is that with that income, I also then use that to kind of reinvest, or things like that. So it's the idea of like
Absolutely.
save intentionally to invest. And then as
You
you
can
have the
save tax, and then you invest at the
Exactly.
same
But
time.
but
That's
I'm
amazing.
focused here, right? Like I'm just focused on the piece. And that's why, there's the big aspect of like human capital and relationship capital, not just investable capital, right? Because I'm able to maybe, experience different things or connect with different people than I otherwise would be able to do. I may not be able to pay $10,000 to get into that room, but maybe I could help volunteer for that group that is full of all the people that I want to be in, right? So my point again is just it's just how we're going about it, who is, there or has done it before, or things like that. But it's like I said, absolutely imperative to have an understanding of like where your main income source is, and then have that to slowly start to diversify in some aspects, but get experience and knowledge from a number of different investments, and then see what's best for you, and then invest in the right way at the right time, instead of just I'm going to keep it in stocks and then be worried about my finances every single day, but I know I have money in the bank, right? Like humans that imagine being like an ape primate, right? We would just be like, oh, I have a bunch of food over there, but we would naturally feel the scarcity. So the ability to have cash flow and other assets really helps our, animal mind, if you will, kind of alleviate some of what our human mind tries to do, right? The animal mind doesn't try to build a tech company or buy real estate, right? The human mind does. So,
Mm-hmm.
absolutely to your point, we want to be able to increase our income in such a way, and then also offset, diversify, tax strategy type pieces, and then have that be a personal sort of investment vehicle. Because I will tell you absolutely this. That every business owner that I know that is personally financially sound, and they, could certainly make more from their business, but they don't have to, they make better and more intentional and longer term decisions, right? Again, the difference between 6, 7, and 8 figure earners. If I'm not concerned about seeing a return on investment for 2 years from this, investment, right? Within my company, that is, because I'm financially secure personally and I'm not,
Mm-hmm.
going out and spending all this money or things like that. If you love Porsches, piece of advice, like go rent one for a day, right? Like you can get the same love renting. But it's the aspect of I'm able to make the best decisions for my business, for my employees.
Mm-hmm.
I allow things to come and I learn from them, but I'm not this has to happen in this amount of days or else, right? Because then you're forcing and you're, causing pressure and stress. You're potentially, people are leaving your company. That's not good, right? So the more ability is your responsibility as the business owner to not ensure that the business finances are in check and aligned, but also your personal finances. And if you know this, like you do, and other business owners know too, like your business is a reflection of your personal life. So as you're showing up and being kind and generous and financially sound and things like that, that just transitions into the business too.
So, Paul, that's fantastic, and I think that what you're sharing is really inspiring. Now, the transition. I want to ask you about the transition between from entrepreneur to investor,
Okay.
because this is when the magic happens, when money actually start to work for you. So you don't have to
Sure.
work for money. So money
Yeah.
work for you, because the beauty about the money working for you is it doesn't get tired. It works 24 by 7, doesn't it wake up, is it doesn't stop. So and this is amazing, because you're going to work because you want to, not because you have to. And it's different way that us entrepreneurs we can experience life. I always the main uh, vision for this broadcast is on the main message that we're sending out there is that we believe that all entrepreneurs should be healthy, wealthy, and happy. And in
Mm,
order for this to happen, this is side of it to for entrepreneurs to become, because not necessarily you could be a very good entrepreneur, not necessarily
sure.
you become a good investor.
Mhm.
How was your transition, Paul, from entrepreneur to investor? Because again, it's a skill. The more you practice, the better you become. I believe that if the investor has been entrepreneur first, especially if investing in business, is a big is a big plus, because again it's not the same look at numbers and make a projection that
Mhm.
actually if you have built businesses yourself, because you do understand more the risk and the challenges that the operation might have. But maybe somebody that is just good with numbers, which again they could be a great investor, but um, not necessarily might understand 100% the challenge of how you build a tech company, exactly like you said, like with the hammer and the chisel.
Yeah.
and,
Yeah.
and it might not happen. Not in 2 years, not in five
Sure.
years, it might not happen, especially in tech.
I,
Yeah, we only
I've had
hear.
I've had several companies that have just been really cool projects. Some of them still might be online.
Me
If I
too,
remember.
everyone.
Yeah.
Yeah.
And so, to your question on going from entrepreneur to investor. So
Hmm.
it's like you said, the purpose of your show, which why it's so important for me to be here to share this with people, because it will truly transform like who, the person I used to be that I've now grown. So first is healthy, right? Healthy, whether you have completely all your bills paid for and you can live your ideal life every single moment of every day, right? Or you're not where you want to be and you're looking to grow, right? You need to be healthy. So ultimately, what that means is, with the nutrition, with fitness, with just meditation mindset sort of piece, right? It requires focus. And that's ultimately what is required to get to your first million, right? It's focus. You do one thing very well, and then you start to slowly, expand, right? You're not into 12 different things, because the issue is if you get into like the real estate and you have this company and that company, all this kind of stuff. And I say that because I've had that situation where I was
Hmm.
constantly juggling five different things,
Hmm.
short-term rentals, long-term
You don't
rental,
focus in one,
or like
yeah.
you're
You're all
disbanded,
over the
right?
place, yeah.
Correct. So you need to focus the same things with health, right? So focus like going to or getting some sort of like exercise. I even at some points in my life have just been, I'm going to go outside when I first wake up for 30 minutes, right? That's my exercise. Exercise doesn't need to be difficult or hard or
Hmm.
challenging, but our body naturally needs, right? So we need to do it, right? So as part of becoming that investor and the idea of like, I can live my ideal life at any moment of the day, you're still going to want to and need to be healthy. So whatever kind of habits you have now in terms of again eating, sleeping, all these things about yourself, now's the time to do it, because it is the true unlock piece for where things are. I know too many, people, in a lot of ways, this is my brand, the Investor's Guide to Joy. Instead of just getting to that millionaire mountain, right? Let's instead pursue the path of joy. And I've seen how I've
Hmm.
pursued the path of joy. I got, 24% of a company that someone essentially gave to me because they were just like, hey, I want to see you succeed. You're really
Wow.
great. Let's go do this, right? That's very different than working really hard, right? And so my point is just there's all these, again, relationship capital sort of pieces. Like I'm focused on joy. I'm living my best life regardless of the income. And by doing that, I believe we will ultimately create more income, not just for ourselves, but others, right? And so that really goes into wealth, right? So as we are going from entrepreneur to investor, The two things I will share that will save so many people so much headache, so much money. You can send me some of your money for how much I saved you. But it say that two things happen. One is that we oftentimes don't realize the nature of the consequences. So, for example, if I'm building a tech company and then I also start buying all this real estate, imagine I'm on a call with an investor and I get, constant calls from, a tenant or something, and they're throwing me off in terms of like this call, right? My point is that we don't want to be so split in terms of our time, and we want to understand how some of these investments impact us, right? Maybe we have a property manager that kind of offsets some of our time, so we still get some of the income,
Mm,
we get the depreciation, we have the investment, but ultimately my day does not look like, craziness, right? So
yeah.
we need to kind of recognize like what we're sort of investing in. And then the other thing is going to be how we're investing in it, and the details of it. So what I mean is this. Again, this is why I created Octane, because I've seen this happen too many times. You meet someone at like a real estate meetup, right? They raise funds for multifamily or office or some sort of investment, right? You may not have a financial advisor, or maybe you do, but they don't have background in real estate. So you're left to your own devices, right?
Mm-hmm.
They're saying, oh, hey, let me put 50,000 or $100,000 into this deal. Well, you possibly shouldn't, maybe because you didn't third party underwrite it, potentially because they haven't done several deals and they're just a nice, good person. I do a lot of deals with nice, great people, but I also don't do deals with nice, great people. And guess what? They're still nice, great people, right? Because it has to be about the deal. It has to be
Absolutely.
about person themselves and their character as well as their competency. But my point is to say, like, we oftentimes don't have that experience again of that like family office type, like, hey, this is a good investment or not sort of piece. And what happens is that as an investor, we want to get to like that level of sustainable kind of freedom, if you will. And it's like, oh my gosh, this is going to pay me 1.5 multiple and have a 8% pref in terms of cash flow. I have to do this deal. Well, do you? My point is that we might be forcing things and not realizing it, um, for a number of different reasons. But ultimately, imagine if you didn't get that $100,000 back or that 1.5 multiple, and you spent 3 years, accumulating that $100,000. The deal went south. You maybe even had to put more money in as a capital
Mm-hmm.
call.
Mm-hmm.
That's not good, right? And certainly no one wants that. But my point is that as we go from entrepreneur to investor, we need to have the right people around us. We know as entrepreneurs that we delegate and elevate, right? But for some reason, when we become investors, we're like, no, 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 I got this. I totally understand everything. And it's like, so you have a background in private equity, investment banking, analysis, and like what?
Risk,
Yeah,
risk.
oh my God, rent, taxes, like all these kind of things, right? And so you need this group of people to really help you do that transition. Again, I've talked about, if I had a dollar for every time I said octane on this call, I'd have at least five. But my point is just like that's why like it's so important for me to have people have that like business minded growth piece around them as the entrepreneur, as well as those financial sort of like aspects, because otherwise you're going to do opportunities that aren't the best for you, or you're going to maybe put too much into that. I also know entrepreneurs, myself included, that I've been in situations where like I don't have cash, like I cannot pay rent next month, but I have, four properties, each with, I
Mm-hmm.
don't know, 200 grand in equity that I can't access, right? And so it's like, hey, friend, you want to give me a loan? Like legitimate, even up to the eight-figure part mark. I know a couple people who are like, hey, could you give me 40 grand to float for 2 months, right? And so those aspects are absolutely imperative. So it's important to have financial guidance as we're being investors, just like we have business guidance. So if you don't have a business coach or an accountability sort of piece or some sort of board of advisor or a C-suite or something within your business, that's also an opportunity for you to grow and try and be, right? Because again, who has done it before, who can help me, who can do it for me, things like that, right? That's the same exact darn thing with being an investor, but oftentimes I felt and have experienced that like we may not have the $5 million liquid, right, to work with a wealth manager. And so we're like, oh, well, then like I just need to make this money myself and then I'll go talk to the wealth manager. Well, again, why I created Octane. So we want to make sure we always have kind of these advisors and feedback loops and things like that. One for business, and this is a key thing that I've not done that well over my career, is to have again those advisors and people there. to coach us and train us and help us, right, with the business. And like I said, also with the investments. So that way we can make that transition if we want to be, full-time investor. And then I also know investors who are then, investing back into companies. But again, we have to have some of those basic blocks. Otherwise, we're just, rolling dice, really, and hoping for the
Mm-hmm.
best. And it sometimes
Rolling
works,
dice,
right?
exactly like you described. Yeah. And then, Paul, there is other way that we can structure to be entrepreneur. The other day, a tech company was asking me to help them out, and when I'm talking to them, they say, well, you see, they start with the product, and they start to they have good corporate jobs. They were doing doing the business on the side, so they all have good salaries. So that
Yeah.
they're putting money and money and money and money, and say, guys, how much you put into the thing? It's over $200,000. I'm like, what? And now they they don't have resources to bring the product to become market fit, and then they
Sure.
put all the money in the product. I'm like, guys, with this money you could buy 3 houses or another type of assets, and you will have unlimited money to develop the MVP and also to marketing, because to market the product and to make it market fit, to show the product to the marketplace, and get the feedback of the marketplace, what they really want and what they really want to buy.
Mhm.
You need resources for that. What do you thought? Are you gonna create a product, and because you thought that this product is gonna change the world, people will come and buy it out of the sky? So
Sure.
the what we're talking for is another way that we can make the life easy for the entrepreneur. If they understand that if we can have a path to grow a business in a more sustainable way. And I'm talking about property, but again, there are other vehicles out there that they have low risk. I'm a big fan of cash flow. Um, and the friend of mine, for example, all her business, she lends money against
Okay. Yep.
property. So it's very
Yep.
secure. Do you understand?
Sure.
There is a very good way, and you don't need to own any property. But again, you have that cash flow because the money is lent secure against the property. Well, you don't pay your loan, you need the property. So it's actually
Sure.
a very good way for the entrepreneur to diversify and have sources of cash flow that, number one, it will give you the income, steady income for you to invest in marketing, for you to invest in product development, and you can the risk, if you don't have all your eggs in one basket, you have some of them money in
For
property,
sure.
some of them money in a lending vehicle. I don't
Yeah. It's
know.
working for you, like you said.
Or
Yeah.
exactly, and give you cash flow. I know other vehicles. I know that some stocks pay dividends and
Mhm.
can give you money monthly. I'm a big fan, Paul. I had to tell you about cash flow because my first business, it was exactly renting the room. So
Yeah.
I was very young like you, and getting a lot of money monthly.
Sure.
So I love because we need money every month to pay the rent, or to
And
buy
that's
goods and
another
everything.
thing. Yeah, that's
And
another thing.
everybody focus the investment in capital growth and capital
Sure.
appreciation, and to put the money
Yeah.
there and keep it safe for years. It doesn't have to be this way, Paul. We can balance out the whole thing, right?
Yeah. Yeah. That's one thing I've seen, that oftentimes we want to go for the, equity play, right? Instead of necessarily the cash flow. And so, for example, debt funds, right? Investing in those, right? Or, kind of doing private money lending, like you're mentioning. Total asterisks, like if you are lending, money to other people, like have advisors, have like the legal stuff. Don't just like give money to people. Cause I also know of people who've just been like, oh yeah, I'm gonna get,
You need
6%
to know what you're doing.
fifty
You need to
thousand
know what
dollars
you're
and
doing,
then
otherwise you can lose all your money.
exactly. Yeah, yeah. So
Mhm.
I'm more of a fun, structure, legal consequence kind of person than just like I really trust someone on a handshake. So the other thing that I found to be like the best, and part of the reason why I started raising for it, is with oil and gas syndications, right? So if you're a W-2 employee or even a business owner who has high taxable income, right? You're then going to pay a lot in taxes. By investing in oil and gas, you're going to get up to 100% of the amount that you invest in depreciated. And in terms of a cash flow, right? You are also getting typically 15 to 35% annualized returns. Okay.
Wow.
Completely passive. It's also, diversified, right? Because it's not real estate. It is
Mm-hmm.
different.
Mm-hmm.
Now,
Mm-hmm.
I'm really big in terms of educating on this, right? Because if you're coming from real estate, you're like 15 to 35%, and that's normal. Yes. However, there's basically five different types of oil and gas investments. We won't go through them here. If people, really want to know, on my website, there's an investment tab that says oil and gas, and I have an ebook that breaks down everything in terms of the different types, the risk, right, for them, how it works with taxes, things like that. I've had several real estate guys sell some of their portfolio to put into oil and gas just to have cash flow. And one of them even became a life coach, right? Because he just needed the cash flow to then go do what he, loved to do. But he also needed to offset the capital gains and all this sort of stuff. So meaning to say that like absolutely cash is king no matter in what currency or state or market or economic condition. And so you want to be able to have, again, those type of things like the oil and gas, like the debt fund, and yes, real estate, if you kind of own and operate it, right? Just like you said with rent by room or maybe a long-term rental. But regardless of what cash flow you have, the one thing that's also snagged me, we'll say, a couple times is that I believe the cash flow will constantly happen at the exact same rate and time and piece, right? And so we also want to make sure from a diversification and from a just risk pool sort of piece to say that if we're getting $2,000 a month for this stuff, we don't only live on the $2,000 a month. Because imagine if
Mm-hmm.
1 month you get that $2,000. Well, guess what? You have $0. Okay. We want to make sure that we have reserves, right? And yeah, we have this cash flow, but we want to create this kind of flow of money ultimately where we have our, reserves and then we have our cash flow, but some of that cash flow is, kind of being saved or stored away, or ideally it's most of the cash flow, right? Ideally, you
Mm-hmm.
still keep that job or have that business or things
Mm-hmm.
like that, where it's still, pumping dollars. And then you're not living off the cash flow, but you're using that cash flow to reinvest. I was able to do that with real estate, with short-term rentals, and my home. I had a
Mm-hmm.
condo. I bought a house. I sold the condo. I, bought another house, and then I bought another house. Right. So in the span of 18 months, I had three houses. Okay. They're all like 2,500 to 3,000 square foot homes. Right. They're large homes. They also
And
have
they
some.
all giving you cash flow.
Yeah, they're all giving me cash flow. Yeah. So two of them are short-term rentals. They're all in Texas. Two of them are short-term rentals. One of them's a long-term rental, rent by room, right? I lived in that for 3-ish years. But it's to say that with that cash flow, I've been able to use that to offset income and have the cash flow or sorry, offset income in the sense of taxes, right? There's special short-term rental kind of depreciation and tax rules that you can do. You can also do cost segregation studies, which depreciate the property values accelerated to, again, offset taxes. But meaning to say, like, I was able to multiply my net worth by 7 times in the span of that 18 months because I was investing properties in this right way, right? Which
Mm-hmm.
ultimately, as a tech business fundraising, helping people entrepreneur, right? I then had this, backbone to say, hey, if cash flow doesn't fall, I still have these assets. However,
Mm-hmm.
here's
Mm-hmm.
you can't access your assets. What do you have? You have nothing. You
Mm-hmm.
have nothing, right?
Mm-hmm.
So
Mm-hmm.
that is a key thing again to know that
100%. Because
you
Paul, it
want to have
says
the
really
cash
easy.
flow.
It says really easy a vehicle. Look, if you invest this money and you hold it and you see you're gonna 10x your money, you're gonna your capital grow. And sometimes it sells really easy, that, and it's very easy for people that doesn't have experience investing. That say, wow, if I put all this money, I invest all this money in this deal,
Mhm.
and I hold it and I cannot access it. After 2 3 years, I'm gonna make 10 times the money, 20 times the money. However, we pay
Yeah.
too much attention to capital growth
Yep.
and very little attention to cash flow. Where in my view, like I mean, I'm I got your same background where I'm more in love with the cash flow. I bought a property, with we have a property, and honestly, the property hasn't go up in price. in the 8 years, but it generates a very good cash flow. That makes sense.
Mhm.
So this is something that well, the price doesn't go up, but it doesn't
Yeah.
really matter because you for years you have this cash flow again and again and again and again and again, and you can use it. So in your as you're an expert investor, how how much uh, as an investor, yeah,
Mhm.
in 100%, how much percentage is important for you cash flow, and how much percentage for you is important capital growth when you invest your money?
And you're thinking like right after I become an entrepreneur and now I'm an investor?
Yeah, now, as you are right now.
Oh, as I'm right now? Okay, and
So
I'm
what is
thinking,
more important for you, cash flow or capital growth? And if both things are important, in
yeah.
what percentage this is
So,
your favorite and why?
yeah. So, my ego died with the sense of like equity type pieces, right? Again, I mentioned, some oil and gas, stuff and opportunities that we have in terms of we might go buy some oil and gas companies and operationalize them and all this stuff, right? Also, there's a carbon credit play. That's another 7 or maybe 8 figure business. It could turn into nothing, right? That's part of being an entrepreneur is like it's either something you learn a lot or it's, big, right? So my point is like those things exist, right? Like I have some of those things are in the works. That's like an 8 figure type thing, right? Now, in terms of what I, care about and what I'm focused on, is yeah, cash flow and creative, like financing. So what I mean by that is like the ability to maybe leverage my stock portfolio or to use whole life insurance, to as I have cash flow then put that into some of these vehicles to then have those things grow, right? And then get loans on those things to then have a bigger chunk to maybe invest in something. So my point is to say with cash flow I can then live my life, build my reserves, and then continue to eventually have equity plays and then have those big investments. So it's kind of like a 1 2 3 hit, right? It's not like a I don't know what other example, right? But it's cash flow, cash flow, cash flow, and then like eventually a hit. So in terms of like a percentage, I would really say with where I'm at financially, it would very much be, cash flow like 80% sort of thing. Because with excess cash, a couple things happen. One, I can tithe and I can give generously, right? If I have all my net worth and all my finances tied up into property and assets, guess what I can't do? I can't, give someone $100 freely because, they deserved it or did a good job or like, be as generous to my nieces and nephews, for their birthdays, right? I had my parents come with me to Costa Rica last year and I was just like, hey, like I have this big house. I'm here. I stayed there for a month and a half and I had a bunch of friends come too. And I was like, hey, I'm here. Like if you want to come, come, right? I wasn't concerned about the money, right? And it's meaning to say like, one, I had a different frame of it, right? But the other thing is with cash flow, again, I have the ability to be more generous, and I have the ability to be a better investor. Imagine if I gave you a deal of the lifetime right now, but you kind of had to do it right now, right? Not in a pressure way, but my point is like if you don't have the cash or the ability to take advantage of opportunity, then you're not going to be able to, right? Especially if you de-risk with having constant cash flow, you're going to be your own VC of sorts, right? Where,
Mm.
you invested 5 grand in a deal and it, didn't work out, like you're going to be okay, right? But if you save all this money and you put 100 grand into it and you have no cash flow and you lose that 100 grand, God forbid, guess what you have? Well, you have no cash flow and you have no money in the
Mm-hmm.
deal, right?
Mm-hmm.
So cash flow always, 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 because cash flow is also going to vary, right? In one of my properties, I redesigned it and I doubled the revenue, right, in the span of a
Wow.
year.
Wow.
And so I'm hoping to do that with my other property I just renovated. But it's the point, Harry, where it's like, cash flow will vary, right? Sometimes goes up or down, but it roughly ideally stays the same. But again, if I don't have cash flow, I don't have, really the ability to live essentially, right? And then it's really hard to kind of do this thing called joy, both within ourselves and, with what we give. Now, joy isn't something that we like have to attain. Joys within ourselves. We just need to accept it, right? But ultimately with cash flow that gives me the most options to then do the equity. But if I have little cash flow, then I have a bunch of equity. and a bunch of challenges along the way.
So, Paul, if someone is in love with our conversation, how people can find? Can you please mention your website just in case the people
Sure.
listening in the car?
Yeah.
How people can have access to you? How the process work? Can you
Yeah,
please
you bet.
share that with
So
us?
so the website is Investors Guide to Joy, right? .com. In that, you'll be able to find the resources. I mentioned the 3-year vision. You could download that ebook, right? There's a couple other resources there too. There's also information about, Octane. There's also ebooks about oil and gas, and I'm going to release other, investments too, because I just like educating people and helping people. Because I've seen too many people lose $100,000 and then be like, "Oh, I didn't know that." And it's like, you didn't know this one
Absolutely.
thing. Like,
Yeah.
it's not their fault, right? But again, just
Lack of
there's this gap.
experience.
Exactly, there's this gap. And the other thing too, I have it here with me. I've not officially released, but I wanted to do it on your show here.
Oh,
Um,
absolutely. Thank you.
yeah. So
Wow,
I have a book.
I love
Um,
the title.
yeah, so this is the book it's a co-authored book with Kevin Harrington. So Kevin Harrington is
Mhm.
one of the original Shark Tank members. He founded As Seen on TV.
Wow.
I had the pleasure of meeting him last March. It's been an awesome year and was able to write a co-authored book. But this book of From Startup to Stand Out, Tales of Entrepreneurial Success, has Kevin, myself, and a couple other entrepreneurs in it talking about like how to think about entrepreneurship, what they found to be successful, like all these things. That's also on my website. But really, you can probably find me somewhere. My middle initial is H, so Paul H. Graham. I'd love to connect with people because especially in the age of AI and technology, we're still humans. So whether it's my website or you find me elsewhere, would love to just connect with people, see how I could help them, or what things they might need help with, and just build businesses, grow life, and like you have for your mission, right? Be healthy, be wealthy, and be happy. Absolutely, yes to
Thank you
all
so
that.
much. Thank you so much. And with that note, see you guys. Once again, thank you so much, Paul. These have been very inspiring. And again, not we as entrepreneurs, we talking about how to grow our business, but we need to know more about that transition or learn more about that transition between become a good entrepreneur and a good investor. Because if you are a good investor, you can become even a better entrepreneur because you can use better use of your money and you diminish your risk. Something that is a great piece of information, and people will find out that there is a imagine just for a minute that you will have unlimited money coming to you. I mean, every month for you to invest in marketing. Just to give you an idea. I'm not talking about the amount, but imagine that you can have 2,000, 10,000 that will come for you to you every month that is disposable, and you can use it for marketing for your own business. Imagine what can you do to your to your business. So, and again, if something happened to your business, guess what? The money keep coming.
Yeah.
Imagine that you can, guys, as an entrepreneur, can create that for your life. Uh, Again, that will open the path for you to be healthy, wealthy, and happy. Because when these financial struggles, sometimes they go inside the brain of the entrepreneur, and start this emotional pain become physical pain. Then people have heart attacks and things like that, and they got depressed
Yeah.
because wow, they make all these millions, and now they lose it, and they don't have anything, and a lot of all that affect a lot of your mental health. We don't want any of this for any entrepreneur. Just to let you know, if you make a million and you lose it, you have the ability to make it again. You just need
Mhm.
to change the structure. And maybe if you listen to this broadcast, what Paul is sharing with us, the second time you're gonna make your multi-millions is gonna be way easy because you're gonna structure how to grow your business in a different way. That makes sense. So thank you
Yeah,
so much. Yeah.
Harry, I want to share one thing because you touched on this that definitely needs to be shared for the different types of entrepreneurs. It's the evolution of entrepreneurs.
Mm-hmm.
And the first type, founder entrepreneur, right, are focused on the product. Okay, especially in tech, we're like, I got to build the best product. Okay,
100%. Yeah.
yeah. The second time founder, they're focused on marketing, right? They may not have built the product, they may have an idea, they're just looking to talk and feel things like that, right? And the third time founder is focused on marketplace, right? They may not even have an idea of what the product is, but they're looking to create a community and foster it and things like that. And so that is something, like I said, I just had to share because that has helped me so much because I love the product. I'm analytical. I want to build. I just like building with Legos, right? Puzzles, things like that. But that ultimately is a first type founder thought process. We need to
100% agree with
marketing
you.
or the marketplace. That's how things go abundance. We become investors. We live that really happy, wealthy, healthy life with that as well. So Harry, thank
And it's
you. You are
possible.
the best. Yeah, no, exactly.
So for
So
some people listening, they say, "Oh, this guy they're talking about something impossible," and we just want to share with you guys that is actually possible.
yeah, do
Um,
the impossible. Yeah.
exactly.
See, who knows? Who knows if it's possible? And it's just
Just
trying
go
and
for
being
it.
for sure.
Thank you so much, Paul. And with
Thank
that
you.
note, see you guys in our next episode of Unstoppable: How Brave Entrepreneurs Like Paul break that wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.